So you bought your first Bitcoin, fantastic, but what do you do with it? In this guide, I'll show you step by step how to cash out safely, the best methods to use, and the #1 rookie mistake to avoid. First things first, you can't transfer Bitcoin directly from your wallet to a bank account. Banks don't handle Bitcoin. So the process has 2 steps. First, you sell your Bitcoin for a traditional currency like the US dollar or euros, and then you withdraw that money to your bank. But there are other ways to store, manage, and trade your Bitcoin. In this video, we'll cover crypto exchanges, Bitcoin ATMs, and peer-to-peer sites, while also explaining security measures, fees, and taxes. For almost everyone, the simplest and most secure way to turn your Bitcoin into cash is through a major cryptocurrency exchange. Think of platforms like Paybis, Coinbase, or Binance as the perfect bridge for connecting the crypto world to your bank. So let's go through the steps. So if you bought your Bitcoin on an exchange, you can usually sell it there as well. If your Bitcoin's stored in a private wallet, you'll need to transfer it to an exchange first, and it's best to use a well-known regulated exchange that's, has a base in your country. Just note that opening an account is pretty straightforward, but you will need to complete KYC, know your customer, in some cases. Now, that does mean verifying your identity with photo ID. So this is a standard security step to prevent fraud and shows the exchange is operating legally. If your Bitcoin isn't on the exchange yet, you'll need to deposit it. So go to your account, click deposit or receive, choose Bitcoin, and you'll get a wallet address, a long string of letters and numbers. From your personal wallet, click send and paste that address. Double check the address, go over every character. If it's wrong, your Bitcoin is gone forever. Now, pro tip, send a small test amount first. Once it arrives safely, send the rest. Once your Bitcoin lands in your exchange wallet, it's time to sell. Look for a trade or sell button. You'll be selling your Bitcoin for a local currency like a Bitcoin to US dollar trading pair. After that, confirm the sale, and you should see a cash balance pop up in your account. So exchanges are the main highway for cashing out, but there are a couple of other roads you can take. You might have seen one of these at a gas station or a mall. Bitcoin ATMs let you sell your crypto for physical cash right on the spot. You just scan a QR code from your phone's wallet, send the Bitcoin, and the machine spits out your money. Now, some pros. It's really fast, like really fast. It's one of the quickest ways to get your cash out in hand. There are some cons. The speed comes at a serious cost. Bitcoin ATM fees are famously high, anywhere from 7% to a whopping 20%, so 1/5 of your amount. And you'll also face daily withdrawal limits, just usually a few $1,000s, and you'll probably have to scan your ID to use it. So P2P or peer-to-peer platforms like Binance P2P are basically marketplaces that connect you directly with another person who wants to buy your Bitcoin. You can pick your payment method, bank transfer, PayPal, you name it, and find a buyer. Now, of course, there are some pros and cons. The pros are that you get a lot more flexibility with payment options and sometimes even better exchange rates. It can also offer more privacy than a big exchange. The cons are, since you're dealing with an individual, the risk of getting scammed is unfortunately higher. Always use the platform's built-in escrow service. It holds the Bitcoin until you confirmed you've received the money. Do not, under any circumstances, release your crypto until you see the funds sitting safely in your account. If you're holding any serious amount of Bitcoin, please get a hardware wallet like a Ledger or Trezor. These little devices keep your crypto completely offline, making it impossible for hackers to touch. Leaving a large amount of crypto on an exchange long term is like leaving a pile of cash on your front porch. It is just asking for trouble. As for fees, be ready for a few different kinds. There are network fees for using the Bitcoin blockchain, trading fees when you sell on an exchange, and withdrawal fees to send the cash to your bank. Generally, a bank transfer will be your cheapest withdrawal option, while debit cards and Bitcoin ATMs will cost you more. Now, in most countries, including the US, selling crypto for cash is a taxable event. The IRS or HMRC or the tax authority in your country views it like selling stock. If you sold your Bitcoin for more than you paid for it, that profit is a capital gain and you owe taxes on it. How much you pay depends on how long you hold it. If it's for over a year, it's a long-term capital gain, leading to a lower tax rate. If you held it for less than a year, it's a short-term capital gain and it's taxed at your normal income rate. Now, all of this is for educational purposes. It isn't financial advice, and tax laws are tricky, so talk to a qualified professional about your exact situation. If this guide helped, hit like and subscribe for more crypto tutorials. Got questions about cashing out? Drop them in the comments and we'll figure it out together. So that's it. Cashing out Bitcoin isn't so hard. The easiest way to do it is through a trusted exchange like Paybis. You send your Bitcoin, you sell for cash, and you withdraw to your bank. If you're in a rush, you can always try a Bitcoin ATM. And if you want more options, look at peer-to-peer platforms. Now, the key takeaway here is to stay safe whatever method you choose. Thanks for watching and see you next time.